Thank you for tuning in to this week's Hot Property Online. We've talked to a lot of clients, and because of this real estate frenzy going on in the GTA, a lot of clients are trying to get into the investment business. And that could be, it's a very wide spectrum. We have clients who are looking to get a condo downtown, rent it out. We have people who are looking to get student housing in Guelph who want to have 4 or 5 university students live in it. It could be a triplex in the city here. If it's over 4 units, it's now commercial. But we have a lot of questions all the time about investment properties. Can I do it? Just understand a few things. The second you mention investment properties, we're losing a lot of our lenders because they don't, CMHC and the insurers don't back-end insure this. So any lender who back-end insures their stuff with Canada Mortgage Housing Corporation, we can't use. Also, you have a lot of people wondering how much you have to put down. Is it 20, 35? You can get away with 20% down as a minimum. Is there a rate premium? Not much, maybe 10 to 20 basis points, 25 basis points in some cases. It really depends on the situation. The key thing that we tell our clients though is understand that you're looking at a situation where, if it costs $800 to service the debt, and just using simple math here, and it's $1,000 rent, I got a surplus of $200, great. The lenders don't look at it that way. They discount the rent that you're getting. They basically want to make sure that you can carry not only your own mortgage, but you'll be able to carry this as well. So the income that you're getting for rental income may make sense on paper for you. Understand to the lenders, they're going to look at it a lot differently. They're going to discount that rent, and they're going to make it more difficult to qualify. So that's why people tend to start off with 20% down and ends up being 35 or 40% down. So buying investment property, great idea. Love to have a few properties in great locations, but it's not as easy as you think, and make sure you have all your ducks in a row before you go out there. Thank you. Real estate frenzy going on in the GTA right now. We're having a lot of clients who are wanting to get into investment. They want investment property, they want to get into the rental world, and always good to do. Always nice to have other properties in great locations for sure. A couple things to know about it. First and foremost, we have a limited supply of lenders. Not every single one of our lenders wants to play in the investment property business, so that market's a bit less. We get questions like, what's my down payment? I hear it's 35%. You can go with little as 20% down on investment property. Is there a rate premium or surcharge? Very little, not a substantial one, maybe 10, 15, 20 basis points. The main thing is really how the underwriting qualify it. Instead of looking at, hey, it's gonna cost me $800 a month to service this place, and I'm gonna get $1,000 in rent, so I get a surplus of $200. The banks use a discounted rental income. Sometimes they do an offset, sometimes they take the discounted rental income, add it to your income. They want to know that you can afford to carry your mortgage and this new rental property as well. So the underwriting, the qualification is not as simple as you would think. In today's market, obviously I've mentioned this before, we got to go in firm. It's best to understand all the parameters around it, but investment properties, the main thing is your 20% could end up being 35% down, and after you look at the cash flow, understand that the lender's not going to use all of that. So if you have any questions, give us a call. Thank you.